Hey, what's up, everybody? Welcome to the Kezon McNeill Show, where we talk about career and financial hacks. I'm your host, Kezon McNeill, and today we are going to talk about debt. That's what we're going to talk about. Many of you who follow the channel and maybe check me out on TikTok know that I'm actually on a financial journey myself. Not only do I actually help individuals get employment and career hacks, I also am really passionate about people having college funds for their children and getting out of debt, and then also just having general life insurance to pass on legacy money to their loved ones. But today we're going to focus on debt. I see a lot on the internet about getting rich with these courses, and you can go flip some real estate, you can do a lot of Bitcoin and crypto and all those great things. And while a lot of those things are true and it's great, amazing opportunities out here, I think first it all starts with your debt, right? And I'm just going to give you just a really basic understanding fundamentally of what's happening in your situation in your life right now, right? And how do I know? Because it's 98% of 99% of Americans right now. So I'm pretty sure I'm gonna be close to being right because it's my experience as well. So what happens right now is, or what's happening right now, is you are allowing so many people to have a seat at your table, right? Like we talk about having a seat at the table, getting so wealthy to the point where we have a seat at the table and we're invited into the room. A lot of individuals don't really understand what that means. It just means that you kind of grow, you can start to get invited to different rooms and the money changes, the conversation changes, and that may be true, right? I personally haven't experienced yet being invited to these rooms, right? Just me, right? But I know they exist. I just haven't gotten there yet. So I gotta, keep grinding, right? But what I do know is that there are people in my room that I didn't invite into this room. There are people sitting at the table with me that I did not invite. And those people are banks, mean credit cards, car loans, mortgage, anything that you're paying out outside of your core bills. That's what I refer to as banks. They're all banks, right? So I know I didn't invite them into my room on purpose, but by me doing business with them, because I use their money, they automatically get a seat at my table. So I woke up one day and I said, there's a lot of people with a seat at my table. There's a lot of people that I don't even really want at my table, but they're welcome at my table because they've loaned me money at some point and I got to pay them back. And so by me having that transactional relationship with them, they automatically get a seat at my table. And if I'm not a good partner with them, meaning I'm not paying them back at their terms, man, they can make life real challenging for me. So it's a very simple way of looking at things. And so when I thought about that, I was like, man, I don't like this. I don't like somebody being able to decide that they can sit at my table without me having a decision in that process, right? So what I started to do was just basically start paying down debt, and I used my cash value insurance bank to do that, right? But full transparency, you don't have to have cash value insurance policy to do this. You can do this with CD or, you can do it that way, but it works best with cash value insurance, in my opinion, because we get to use the same dollar twice. And that's something we can go into more into detail if it's something you decide that you're interested in. Just hit the link below, schedule a meeting with me. But think about how many people have a seat at your table or who are in your room right now that you didn't invite into the room, right? Think about it, right? And, we get so hung up on these monetary or materialistic type of transactions we have to make. We have to have, the shoes, the designer shoes. We have to, you know what I mean? We have to go ball out of this restaurant, right? While there's nothing wrong with that, you're allowing these individuals, meaning these banks, to continue to have a longer seat at your table. So until you put a stop to it, they're going to continue to have a bigger influence at your table, right? And we get caught up in credit score, for example. We get caught up in, if someone has a 750, 800 credit score, they got to be the dopest person in the world. And see, that's kind of how to set up for you to really believe that. So now, so much so, you got guys going on dates and with girls, and girls going on dates with guys, and the topic of a conversation is what's your credit score? And that is being the determining factor if this person has their life together, because they may have a 700 plus credit score. So now they doing their thing. That means they know what they're doing. All that means is they are paying their bills on time. And you don't know how many bills they're paying. For all you know, that Benz they just got out of, they picked you up to go to dinner with, that's a loan. And all these credit cards. So what you see may be like their excellence and success, but they may be working a part-time job or working all 45, 40, 60 hours a week just to maintain, to do what? Pay these people on time. And they just living off of paying these people on time to keep up with an appearance. But they got a 700 plus credit score, so they must be dope. But they cash poor. They don't have any cash. They can't go touch $20,000 for a business opportunity that comes up. But here we are, males and females. I'm not just gonna say my females, my males do it too. We here deciding if someone is a dope person or if they have some potential to be a good match. They, in a general first date, we're asking them about their credit score. And we're using that to determine if this person's successful or not. I like to hear, if I'm a single guy, I like to hear I'm on a date with someone and they talking about, yeah, I'm trying to get some property over here. I have this going on over here. I'm leveraged here. They moving. They making moves. And I understand as a businessman, that doesn't always come with you're going to have good credit, because now you're extending yourself, right? So you're out there, right? High risk, high reward. No, I respect that. I love that, right? As long as you're managing it. And we know sometimes you're going to take a ding on your credit. It happens, man. That happens. I'm not immune to that myself. And the reason why I can speak on that is because I'm actually doing it. I've actually gone through that. I'm not talking from a standpoint of just hypothetically. Now, this is my life, right? But I don't look at someone and say, you have a 730, 740 credit. Oh, you doing it. They may not even have any cash in the bank. They might, you know, you can just go to work every day and have 750 credit score. It does not mean that you are, this person is just got it all figured out. So I want us to stop that. I want us to start having more meaningful conversations in terms of what someone has going on. What things looking like for you in the next 18 months? What are you working on now outside of your 9 to 5? What are you passionate about? I love that question. Like, what's some things that get you excited outside of your 9 to 5? And what do you see yourself doing like the next 3 or 4 years? These are the conversations we need to be having. What makes you happy right now about what you're doing outside of your 9 to 5? If you didn't have a 9 to 5 and you had a choice, what would you be doing? You learn so much about people that way. I'm gonna tell you what the answer is not. What the answer isn't is what's your credit score. You're just showing your ignorance by doing that. This is my males and my females. I'm just telling you guys. So now that I got that out of the way, I want you to start focusing on getting these people out the room and getting them away from your table. You don't have to have a cash value insurance policy to do that. You can use the snowball method. Whatever debts you have, I'm telling you, do it. Whatever debts you have, I don't care if it's the one with the highest balance or lowest balance. I tend to prefer to use the one with the lowest balance because you want to have those wins. It feels good when you win, pay a debt off, right? And you want to set all your credit card payments up, to minimum payments, meaning whatever the minimum balance, the minimum payment you can make, you want to have that set on, and then you want to find the card, the lowest balance, and you want to throw all your extra money at that card, throw it at that card. So if your payment is $100 a month, you want to throw as much as you can over that $100 a month. It could be maybe $150, it could be $200, it could be $300, whatever you can. And if you are a couple doing this together, same thing. Now guys can throw some more money at it together. But if it's just you and you're doing this yourself, you throw all your extra money at that particular debt. Maybe it's only $10, maybe it's only $15. I don't know. But your extra money goes there. Any type of bonus money you get, boom, it goes to that debt. All right. So let's say you're paying $100 a month on that debt. All right. Now, fast forward, let's say 7-8 months, right? Now, you have been throwing a lot of money at that particular debt. So now you paid that off, done. Your minimum payment was $100 a month. You were throwing all your extra money at that debt, right? So now you're used to spending the $100 a month. Now we're going to the next debt that you were paying the minimums to, one of those debts. Now we do the same thing there, right? So now we're throwing more money at that debt. And the money that you were paying to the other debt, the minimum payment of $100 for this example, now you're rolling that in to the new debt you're paying off now. So it's a snowball method. We want to keep doing this progressively all the way up until we get all of our debts paid off. And I don't really care about how many debts you have, because the more debts, the bigger the snowball. Within 18 to 24 months, things like credit card debt is usually wiped out. It doesn't even matter how many credit cards you have. It actually works better the more debt you have, right? So within 18 to 24 months, you could have most of your debt wiped out. I'm not talking about your house if you have a mortgage. You know what I mean? I'm not talking about the student loan. Those are usually just those type of installment loans are usually a little longer. But the revolving accounts, like your credit cards, those matter a lot to your credit report, to your credit score, right? So think about erasing those debts in the next 18 to 24 months. For some of you, it could be shorter than that, right? Sooner than that. But in most cases, it doesn't even matter how much credit card debt you have. Usually within 18 to 24 months, you knock that out. without a cash value policy like I do mine, right? Just doing it simply, snowball method, right? But I choose to use my cash value insurance policy because I'm still making money and I'm not using my money while I'm paying off this debt. I'm using the insurance company's money, and I'm also creating more money as I do that. It's a whole nother conversation. Hit the link below if you really want to look into going onto that journey. And I love that way of doing the debt payoff. However, again, you don't even have to do that. I'm just here sharing information that I want you to focus on getting people away from a seat at your table, getting them off your table. We got to get these people out the room. And the minute you can't determine who's in your room or not, man, that's a crazy feeling when someone's automatically in business with you because you got a credit card debt with them or some type of loan with them. So they have a say-so in things and they got to get paid. And here we are, you're paying them first. So you get your paycheck, them debts getting paid first. Tell me I'm lying. When the way it should work while we're paying these debts off, what I also want you to focus on is, and it's a habit you got to create, is paying yourself 10% first. So whatever your direct deposit is for those 2 weeks, pull out 10% of that and put it into a savings account. I prefer to put my money into my cash value insurance policy. If you don't have that, put it into some type of savings account for yourself before you pay any bills off. So just like you got these auto drafts on these other payments, as soon as you get paid, transfer 10% to yourself in the savings account somewhere. It's uncomfortable to do it, but when you think about it, you did the work, you made the money, so you should pay yourself first. 10% is really just a start. You really should be trying to pay yourself at least 30%. But 10% is a great start. And if you need more understanding on why you should be paying yourself first, a great book to read is called The Richest Man in Babylon. That book changed my life, and it also changed the way that I look at business opportunities and how my relationship with money, right? It's called The Richest Man in Babylon. It's an easy read, So check that out if you so desire, but you should be putting away 10 of everything you make. If you get a bonus from selling a property, 10% should go here. If you get your tax returns, 10% should go to your savings, 10% rule. And start implementing some type of snowball method to pay off your debts. If you need help with that, reach out to me. I like to do mine through my cash value insurance policy, where I get to use each dollar twice. Hit the link, set a meeting up if you want more information on that. But we got to get these people away from our room and get them out of our table, get them off our table, because it's keeping us poor, and you can say how well you're doing with your 750, 800 credit score, but how much cash can you touch right now? Because this is not for, if this doesn't apply to you, I'm not talking to you. A lot of us who have these 750, 800 credit scores, we're still paying on a lot of people. It just shows us it just shows that we can pay people on time, that we pay our bills. That's all but you got to start stacking some cash too. But many of us, we can't do that because we're so busy paying all these people who got a seat at our table. But now if we start to pay off some of these debts, we get rid of those people that have a seat at our table. We get rid of those people that have a seat at our table, and we get to keep more of that money. So look, I hope you guys got something out of this video. Please share this with someone who could possibly benefit from this information. As always, like the channel if you like what you saw. I appreciate all the support on the channel. We are approaching 20K subscribers. I'm so excited about that. Did not start this channel with that in mind, to be honest with you. Did not start it to have it monetized. And here we are. I'm at 20K subscribers, about to be at 20,000 subscribers. And that's just the beginning. I really love and enjoy what I do. I love all the feedback that I get, all the people that I've actually helped. And this one person, if it's helped just one person, it's worth it to me. So hope you guys enjoy the rest of your day. Have a fantastic week. And I'll see you all over the top.